All right, let's get right into it. Today we're talking about FactSet's earnings, and this one's a real head-scratcher. On paper, the report looked okay, pretty solid actually. But the market had a completely different take, and it was brutal. So let's break down what happens when a good-looking number just doesn't cut it.
So the morning the numbers came out, bam, the stock just cratered, down over 10% in one day. We're not talking about a little dip here. This was a massive, high-conviction sell-off. It just makes you wonder, what on earth happened? And check this out. It wasn't just a few people getting spooked. The volume was insane. We're talking about almost 6 times the normal number of shares changing hands on that one day. That's not just retail jitters, folks. That tells you the big players, the institutions, were scrambling for the exits and hitting that sell button hard. So, yeah, that brings us to our first section, the market's brutal verdict. We're going to really unpack this puzzling collapse.
And this is a real mystery, right? Because if you just glanced at the headline numbers, you'd think, hey, this looks fine. They weren't a complete disaster. So you have to ask, what did investors see that made them run for the hills?
All right, to figure that out, we've got to pop the hood and take a look inside. The real story, as it almost always is hiding in the financial details.
And this is really the heart of the issue. It was like a tale of two reports, all rolled into one. On one side, you had some really encouraging stuff, some definite bright spots. But on the other side, there were some big flashing red flags that investors just couldn't look past.
Okay, let's start with the good stuff, because there was some. Revenue, almost $597 million. That's a solid 6.2% jump from last year, and it even beat what analysts were expecting. Their organic ASV, that's their annual subscription value, a really key metric for them, grew over 5.5%. And get this, free cash flow was a monster, up nearly 30%. You look at these numbers in a vacuum and you're thinking, this stock should be flying.
But, and it's a big but, here's where the wheels started to come off. Their adjusted earnings per share missed expectations. Not by a ton, but a miss is a miss. The real killer, though, the operating margin. It shrank by 200 basis points. Now that's just a fancy way of saying it dropped by 2 full percentage points. And for a high-quality data company like FactSet, profitability, those margins, that's everything. Seeing that shrink is a huge, huge warning sign.
So, with these mixed signals, what does management do? Well, on the call, they tried to get everyone to look past the current quarter and focus on their big, long-term vision.
The new CEO, Sanoke Viswanathan, basically said, hey everyone, we're at a massive turning point in our industry. The whole pitch was centered on one thing, AI. He argued that artificial intelligence is changing everything, and that FactSet is making the big investments now to be the leader of that change tomorrow.
And he brought receipts, right? He pointed to their super sticky customer base. Over 95% retention is just phenomenal. He talked about smart moves they're making, like beefing up their fixed income data with BondClick and plugging in some really cool AI data from MarketAxess. The message couldn't have been clear. We are building the financial data platform of the future. So please don't get hung up on one quarter's profit margins.
Okay, that's a great story. But then came the guidance for the future. And this is exactly where that grand, ambitious vision slammed right into the wall of financial reality.
So let's pause for a second. The quarter was kind of meh, a mixed bag. The story for the future sounds pretty compelling. So what was it? What was the one thing that really truly spooked Wall Street? It was this right here, the guidance. Their forecast for the next fiscal year was, to put it mildly, weak. Growth was kind of sluggish, margins weren't expected to get much better. But here's the absolute kicker. Look at that adjusted EPS range. The middle of that range is about $17.25. You know what they just earned for the year they just finished? $16.98. That means they're basically guiding to flat earnings, zero growth.
And that's the whole story in a nutshell. Management was painting this beautiful picture of an AI-powered future. But the market just looked at the guidance and heard one thing loud and clear. Investment now, profits later. Maybe. And in the current economic climate, telling investors to wait for profits is a really, really tough sell.
So, with all that said, where do we go from here? It's time to put all the pieces together and give you our forward look. It's what we call the next call.
We're going to break our prediction down into 3 simple steps. First, what we think will happen with next quarter's results. Second, what we expect from the stock price. And finally, we'll wrap it all up with our official rating.
Okay, so for next quarter's results, look for more of the same, really. That mid-single-digit growth should continue. But trust me, all eyes are going to be on one thing: margins. Have they stabilized? Have they stopped the bleeding? Now, for the stock price itself, we think it's going to be stuck in neutral. The stock will probably trade sideways, range-bound, because the market is basically in a prove-it mode now. They need to see that all this AI talk can actually make them more money.
And all of this leads us to our final rating. We are calling FactSet a market perform.
So here's the bottom line. The whole AI story, it's exciting, it's promising, it really is. But right now, it's being completely drowned out by the pressure on their profits and that really weak guidance. Until the company can actually show us, prove to the market that they can deliver on this vision while making money, the stock is pretty much fairly valued. There's just no catalyst to push it higher or lower for that matter.
And finally, you know the drill. A quick but important reminder. This is for informational purposes only. It is not financial advice.